You're my bitch. So don't walk around here thinking you have free will, because you don't. I can crush you anytime I want. So settle in, because you are here for the long haul.
The Moving Average Convergence Divergence, MACD indicator, is a widely used tool among traders and investors to identify potential buy and sell signals in the financial markets. Whether you're trading stocks, forex, or cryptocurrencies, understanding and mastering the MACD can significantly enhance your trading decisions. In this video, we'll review and explore how the MACD works and discuss effective trading strategies you can implement today. The MACD is a momentum and trend-following indicator that shows the relationship between two moving averages of a security's price. It consists of three components. MACD line. This is the difference between the 12-period and 26-period exponential moving averages, EMA. Signal line. A 9-period EMA of the MACD line, which helps identify potential buy or sell signals. Histogram. The graphical representation of the difference between the MACD line and the signal line. Positive values indicate bullish momentum, while negative values indicate bearish momentum. The MACD provides valuable insights into market momentum and trend direction. Here's how to interpret it. A bullish crossover occurs when the MACD line crosses above the signal line, indicating a potential upward trend. A bearish crossover occurs when the MACD line crosses below the signal line, signaling a possible downward trend. Expanding bars suggest increasing momentum in the current trend. Contracting bars indicate weakening momentum, which could signal a reversal. When the MACD line crosses above the zero line, it indicates bullish market sentiment. When it crosses below, it signals bearish market sentiment.
From this day forth, you put your faith in me.
Enter a buy trade when the MACD line crosses above the signal line. Conversely, enter a sell trade when the MACD line crosses below the signal line. Exit the trade when an opposite crossover occurs, or set stop loss and take profit levels based on your risk-reward ratio. Look for bullish divergence, where the price makes lower lows while the MACD makes higher lows. This suggests potential upward reversal. Watch for bearish divergence, where the price makes higher highs while the MACD forms lower highs. This indicates a possible downward reversal. Use the MACD line crossing the zero line as a confirmation of a strong trend. Combine this strategy with other technical indicators, such as support and resistance levels, for better accuracy. Monitor the histogram for sudden changes in momentum. A switch from negative to positive can signal a bullish reversal, while a switch from positive to negative indicates a bearish reversal. Pair the MACD with the Relative Strength Index, RSI, to filter out false signals. For example, look for overbought or oversold conditions in the RSI before acting on MACD crossover.
Again. Oh my god! Oh my god! Oh my god!
Avoid using the MACD in isolation. Always combine it with other technical tools like trend lines, Fibonacci retracements, or volume analysis. Market conditions. The MACD works best in trending markets and may produce false signals in sideways or choppy markets. Adjust parameters as needed. While the default settings, 12-26-9, work for many markets, consider tweaking them to suit specific assets or time frames. Backtest your strategy. Before implementing any MACD-based strategy, backtest it on historical data to gauge its effectiveness. Practice proper risk management. Never risk more than a small percentage of your capital on a single trade, and always use stop-loss orders. Overtrading. Acting on every MACD signal without considering the broader market context can lead to losses. Ignoring divergences. Divergences can offer early warnings of trend reversals. Overlooking them may result in missed opportunities. Risk management. Failing to set stop-loss levels can expose you to significant losses. The MACD is a powerful and versatile tool that can enhance your trading strategy when used correctly. By understanding its components, reading its signals, and applying it in conjunction with other indicators, you can identify high-probability trading opportunities. Remember, no indicator guarantees success. Always test your strategies and adapt them to evolving market conditions. Detailed guides and examples. Be sure to subscribe to our channel, like this video, and hit the notification bell to stay updated. Good luck and happy trading!